Let's have a quick conversation about how to pay less taxes with a sole proprietorship. So here's an overview I want you to pay attention to. First of all, let's talk about sole proprietorship taxes and all the forms you need to actually file with the IRS to actually fulfill your taxpayer obligations. You do not have to file Form 1120, 1120S, or 1065. With a sole proprietorship, you're considered a disregarded entity. In other words, the IRS wants you to actually file Form 1040. And if you have any business items that you need to report, you got to really show this on Schedule C. So very, very, very simple. So there are a couple of things you need to remember about sole proprietorships. You have pass-through taxation, which means that what? Net income from the business will increase the owner's personal taxable income, meaning the business income might push them into a higher tax bracket. So you're not paying taxes at the business level, okay? Like I said, you're not really filing any corporate tax return form, 1120S, 1120, or 1065. And income taxes are not considered a business expense. So some business owners post income tax payments on their profit and loss statements as expenses. However, this is incorrect for sole proprietors because these payments are considered distributions of equity, not expenses. This is really important to really understand the difference here. Now, you can have a sole proprietorship that actually files as an LLC. So sole proprietorship can actually form an LLC. However, some LLCs will still file taxes as sole proprietor. So if you're a single member LLC, you are still considered a disregarded entity. In other words, you have to file taxes as if you were a sole proprietorship in the eyes of the IRS, okay? So when we talk about determining sole proprietorship income tax liability, everything happens first on Schedule C, and then data is transferred from Schedule C onto your Form 1040, and then finally you'll calculate your taxable income. It's really important to understand that you still have the option to elect LLC taxation. In other words, you have to file a form called 8832. That's where you actually can file your taxes as a corporation. Okay, so you can be an LLC, you can be a sole proprietorship, and you can say, I want to file as a corporation. And that you cannot actually be a sole proprietor and file as a corporation. You first need to become a partnership rather, and then you have to you can file Form 8832 to elect C corporation taxation. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So when we talk about paying less taxes with a sole proprietorship, it's important to understand the tax deductions that most sole proprietorships qualify for. I mean, without even doing anything. Okay. So if you're listening to me right now, if you're a sole proprietorship, you can actually pay less taxes and without actually doing anything. So here are the top tax deductions for a sole proprietorship. So you have health insurance deduction, you have business vehicle usage and mileage, self-employment tax, home office deduction, banking and insurance fees, professional development, business meals, traditional IRA contributions, phone and internet services, professional services. We're going to put all this on the screen so you can have a clear idea what I'm talking about. It's important to understand that a sole proprietor who wants to make the most of his or her deductions will be wise to consult always with a professional consultant who can ensure they are maximizing their deductions and taking advantage of everything they are eligible for. The reason is that when we talk about sole proprietorship taxes, a lot of those taxes has to deal with the nation you're in and also the state you're in. So, I can sit here and give you generic advice, but if you want to actually optimize your taxes, it's important to talk to a CPA, to an EA, an enrolled agent, or a tax attorney in your area who can really help you, figure out how to best maximize your tax payments. So, and the thing is, if you're trying to pay less taxes with the sole proprietorship, you need to understand the taxes that sole proprietors pay in general. So they pay federal income tax. They pay applicable state income tax. There are some states that have no income taxes. Okay. You also have self-employment tax. You have federal and state estimated tax paid on a quarterly basis, and sales tax if applicable. So you have a constellation of sole proprietorship taxes that you have to actually account for. And if you want to pay less taxes with this type of business entity, you got to really understand that the planning is important, but also record keeping is really, really important. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about how to pay less taxes with a sole proprietorship. Let me give you a few pro tips here. I want to dig a little deeper here. So the thing, I want to give you a few tax tips for sole proprietors. And when we talk about let's first talk about self-employed tax tips. So as a sole proprietor, you are in charge of your own business, right? And as far as the tax code is concerned, you and your business are a single entity. That's what I said earlier. The IRS looks at you as a disregarded entity. That's how they call it. So while this entails a certain freedoms, it also creates added responsibilities. So you will face additional taxes and reporting requirements, but you may also be eligible for certain business tax deductions. So you have health insurance deductions. So one of the main tax advantages of running a sole proprietorship is that you can basically elect the cost of health insurance for yourself, your spouse, and any dependents that you may have. Better still, you can take this deduction even if you do not itemize deductions on your tax returns. So this is really cool, okay? And so the health insurance deduction is basically what experts call an above the line deduction, meaning it is taken off your gross income before you reach your adjusted gross income. And other deductions, such as itemized deductions, are below the line deductions. Okay, so your deduction is actually limited by the amount of your taxable income. So if you take, let's say, if you take a loss on your business, you cannot also take the health insurance deduction. You also cannot take a deduction for any months that you or your spouse are eligible for group health insurance with an employer. So this is kind of important to understand the gap here. Okay, and you can also write off business expenses. So this is kind of cool. You have so every business has operating expenses, and a sole proprietorship is no different, really. So as long as your expenses are, ordinary and necessary in the parlance of the IRS, you can actually claim them on your tax return. So in addition to health insurance, common deductions include equipment, utilities, subscriptions, travel, and capital assets. And capital assets, I'm talking here about depreciation, okay? You also have self-employment tax. So if you run your own business, you are responsible for self-employment taxes in addition to regular income tax. And so self-employment taxes are basically the equivalent of Social Security and Medicare taxes that all employers and workers have to pay. So this is not just you. Okay, very important to remember. And you also have records and some records and audits in certain cases to make sure the IRS is happy with your taxpayer performance. Let me give you a winner here. So basically, there are certain tax write-offs that you can actually consider if you're a sole proprietorship, and it doesn't matter where you are, whether you are in the city, you are on the countryside, you are whatever, in the suburbs, it doesn't matter, okay? And first of all, you want to think about office space. Office space is really cool. You have banking and insurance fees. Those are important elements also. When we talk about office space, we're talking about you deducting a designated home office if you don't also have another office for business, okay? Also, if you have a dedicated office, storefront, or other facility, you can deduct your rent. So for either option, you can also deduct expenses for supplies and even decor, okay? And so you have banking and insurance fees. So you can deduct business-related banking fees and insurance premiums, such as your business liability or business continuation insurance. You also have transportation, so you can deduct mileage for client meetings and volunteer commitments, and this is kind of cool. So, and the thing is that the standard mileage deduction for businesses actually increases every year. So the IRS is trying to make sure that they are indexing the mileage rate based on inflation. So this is kind of cool. You also have things like client appreciation. So basically, you can deduct for client gifts up to $25 per client per year. In other words, while you're free to give them a more extravagant item or remember them at the holiday and their birthday, you can only deduct $25 worth for one annual gift giving occasion. So this is what it is. You also have a business travel. So you can deduct travel related to business, such as client visits or conferences. Okay, you have industry fairs and that kind of stuff. So, and it doesn't matter if you're a regular business or if you are a sole proprietorship. So as a sole proprietorship, you still qualify for that. You also have professional development, so you can deduct for education related to maintaining or improving your business skills in your chosen field. So whether you're taking a webinar or class, paying dues for a professional association, or subscribing to online or print publications, you can deduct anything that is related actually to your job and designed to further your knowledge in your stated profession. By the way, boss, I want to quickly remind you of today's topic. We're having a conversation about how to pay less taxes with a sole proprietorship. Let me give you a few extras here. So when we talk about paying less taxes with a sole proprietorship, it's really important to understand that besides entertainment, besides travel, you also can you can actually think about things that relate to your specific niche. Okay, so self-employment tax deduction is already established, so that we know this is really important. And so, but again, self-employment tax deduction is very important to understand that you are paying, you are contributing to the Social Security fund, okay, and the Medicare fund for that matter. And so home office, home office, the only thing is that home office, you have to really have a great record keeping sort of policy, okay? You are able to document to the IRS that you have dedicated a specific spot in your house to the business, and you are conducting only business in that spot. Because God forbid, if you are audited, they want to see exactly what's really happening. And sometimes they really pay attention to the room around the rooms, or the room or rooms around the space where you have dedicated the space you have dedicated to business. Okay, and you can also if you want to pay less taxes with a sole proprietorship, you can also write off internet and phone bills. Basically, those should be related to your sole proprietorship, to your business. And you also have to think about health insurance premium. But the health insurance premiums, the thing is that please remember, if you're part of a group health insurance coverage, you're not going to be able to deduct that part. So it's only the ones that you are paying by yourself. And also you have to think about the meals. You can deduct meals also. Now meals can be a little tricky. So a meal is a tax deductible business expense when you are traveling for a business, at a business conference, or entertaining a client. Although entertainment expenses per se are generally not tax deductible. So the meal cannot be extravagant under the circumstances. So when traveling, you can either deduct 50% of the meal's actual cost if you kept your receipts, or 50% of the standard meal allowance if you kept records of the time, place, and business purpose of your travel, but not your actual meal receipts. Okay, so this is kind of important to remember that. One thing that's really important if you're a sole proprietorship and you're trying to pay less taxes is to always remember that you have the travel deduction. Now, travel deduction is really an important element for certain industries. If you're a salesperson, if you're a consultant, if you are, let's say, if you are in a business that requires you to travel most of the time, you really got to pay attention to those things. And business travel must last longer than an ordinary workday. So that's 8 hours. Require sleep or rest, and take place away from the general area of your tax home, usually outside the city where your business is located. And so if you actually meet all those criteria, then the business travel can qualify as a tax deduction. And you should have a specific business purpose planned before you leave home. And you must engage in business activity while you are on the road, such as finding new customers, meeting with clients, or learning new skills directly related to your business. Okay, it cannot be entertainment. This is not a vacation. Okay, and so keep complete and accurate records and receipts for your business travel expenses and activities, because this deduction often draws scrutiny from the IRS. Okay, a lot. I'm talking about big time. So deductible travel expenses include the cost of transportation to and from your destination, such as plane fare, transportation at your destination, such as car rental, Uber fare, or subway tickets, lodging and meals, and so on and so forth. One thing I want to say here is that you cannot deduct lavish expenses, but you don't have to choose the cheapest option available either. Okay, you will still be paying the bulk of your business travel costs, so keeping them reasonable is in your interest in the first place. So your travel expenses for a business are 50% deductible. And one thing I want to say here is that it's one of those things where you have to pay attention to. And also, same thing with vehicle use deduction. You have a dues and publications deductions. You also have interest deductions. When we talk about dues and publications deductions, remember that all those publications should relate directly to your field, to your sector. So we're talking about boards of trades, business leagues, chambers of commerce, civic or public service organizations, professional organizations such as bar associations and medical associations, real estate boards, trade associations. This is kind of important. You also have to pay attention to education deduction, business insurance deduction, rent deduction. So if you're trying to really pay less taxes with a sole proprietorship, think about those things. And don't forget that you also can actually avail yourself of the startup cost deductions. So the IRS usually requires you to deduct major expenses over time instead of all at once. They are treated as capital expenses, right? However, you can deduct up to $5,000 in business startup costs in the first year of active trade or business. And tax-deductible startup costs include market research and travel-related expenses for starting your business, scoping out potential business locations, advertising, attorney fees, and accountant fees. So the $5,000 deductions is actually reduced by the amount that your total startup cost exceeds $50,000. You can also deduct up to $5,000 more in organizational costs, such as state filing fees and legal fees if you set a corporation or LLC for your business. But if you are a sole proprietorship, you can only deduct the first $5,000. Okay. Now, professional fees to consultants, attorneys, and accountants are also deductible at any time, even if they're not startup costs. And business expenses such as buying equipment or vehicles are not considered startup costs, but they can be depreciated or amortized as capital expenditures. You also can actually pay less taxes with sole proprietorship if you account for advertising. So you have advertising deduction. So if you pay for Facebook or Google ads, billboards, TV commercials, or mail flyers, you can actually deduct those. So the cost that you incur to advertise your business are tax deductible. So you can even, as a matter of fact, you could even deduct the cost of an ad that encourages people to donate to charity while also putting the name of your sole proprietorship before the public in the hope of gaining customers. So this is kind of cool. And you also have retirement plan contributions deductions. You also have, finally, office supplies deductions. So when we talk about office supplies, we're talking about everything from copy paper, postage, paper clips, and pens. And the IRS also allows deductions for books, professional instruments, and equipments. As long as they are used within the year, you must generally cover its cost through the depreciation. However, if an item's use extend beyond 1 year. So this is, the thing is that when you have a long-term asset in accounting and taxation, it's usually beyond 1 year. So if the useful life of the asset is beyond 1 year, and you may still deduct the cost of certain supplies that you keep on hand on a regular basis from year to year. If you don't keep a record of when they are used, you don't take an inventory of the amount on hand at the beginning and end of the tax year, and this method doesn't distort your income. Thank you so much for your attention. I really appreciate it. In today's conversation, I will just explain to you how to pay less taxes with a sole proprietorship. So I give you the overview, the pro tips, the winner, and now the extras. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.